Okay, welcome back here to close out the first hour of the weekend edition of the Portland Economics Report. Got my buddy Marin Katusa with me right now. This particular interview is originating from the Cambridge House Investment Conference in Vancouver, British Columbia. You know, the thing that's really interesting about Marin is any subject you want to talk about when it comes to the resource sector, this guy knows what he's talking about. Wealth of information. Thanks for taking some time.
Oh, it's a pleasure.
Okay, Marshall Barrell, the co-founder of the Encompass Fund, co-portfolio manager of the Encompass Fund, is very, very interested in uranium. He thinks that 2013 is going to be a very, very active market, not necessarily for the commodity itself, but for uranium stocks. What do you think?
Well, it's already started that way. In the first week of January, Uranium 1 got bought out by the Russians. The Russians have been the big buyers of Canadian publicly traded companies. It continues the theory we've talked about of the Putinization of uranium resources globally. You had Denison just buy out Fission's assets in the Waterbury region. So you look at all these different areas and it's already heating up. Now with the HEU agreement ending at the end of 2013, what people aren't talking about is what does this really mean? Half of America's uranium comes from downblended nuclear warheads from Russia. More importantly, the enrichment facility in the U.S. is now shut down. There is going to be a shortage of UF6 because Converdyne, which basically enriches, you take U3O8 and SWU to get a UF6, that's shut down. And again, the Russians produce over 35% of the enrichment capacity globally. So there's not just a UO3 shortage about to happen, there's a UF6. Remember, you need both for a nuclear power plant.
Do you see a resurgence, Marin, in terms of junior exploration companies in the sector?
Well, most definitely. We've just pulled over 100% gain on Fission. We're up over 50% year to date on the Denison. But you got to be very careful now. You got to follow Doug Casey's 8Ps. Just because the tide, 5-6 years ago brought up all of the junk with the quality, I think we're in a different market here. If the companies don't have good assets with good management, with cash to be able to explore these projects, you probably want to stay away from those companies. So now I agree 100% that it's going to be a great market for the select few.
You know, the thing that I find interesting about the sector that we're talking about right now is the fact that 20 years ago, when Kathy and I were still living in Portland, the environmental groups basically came out and shut down a very, very efficient source of power for the Portland area. It was a sad day, for lack of better terms, but today the environmentalists seem to be almost 100% behind uranium because they realize, number one, it's clean, and number two, it's safe.
Well, a few years ago, Vancouver and BC had a nuclear-free sign when you would enter the province and the city. They had to remove those signs because we import nuclear energy. That's the irony of all this. And 2 out of every 10 houses in the U.S. is powered by nuclear energy. And
20%.
That is not 20%.
That's fascinating.
Yeah, so 2 out of every 10 houses in the U.S. So that trend is not going to change. It's also the lowest, cleanest cost base. And the most important thing is it's a base load power. Whereas natural gas is peak load. You look at geothermal, it hasn't quite panned out the way people thought. And then the other green energies are all peak load. You can't rely on them 24/7. Solar, its issues nighttime, so it's not a base load power.
I got to tell you, Marin, the thing that I really get a bang out of is, when you look at the various sources of power that we have, whether it's coal, whether it's water, whether it's, what have you, on rare occasions you have a dramatic incident within the nuclear industry. On very rare occasions, given the amount of power that's supplied by atomic energy. I find it really interesting that people really jump on the bandwagon, for example, when you have a situation like Fukushima, and people don't put that into perspective. Because I would venture to say, and I don't know this for a fact, but I would venture to say that there are probably more problems, of the Fukushima type simply in coal mining alone.
Well, 100%. You look at what nobody talks about is because of the Jane Fonda effect and the Homer Simpson and the Simpsons, the nuclear facility, it's easy to pick on nuclear energy. But the real disasters going on right now globally, when you look in Africa, the way they're producing oil in the Delta in Nigeria, the Russians, what their aging infrastructure is going on. The North American energy complex is a global standard. And even after Fukushima, the Chinese came out and said, we have no choice but to move forward with nuclear energy. Even Saudi Arabia is building 16 nuclear power plants. That's the number 1 or number 2 consistently oil producer in the world, and they're investing in nuclear energy. Nuclear energy is here to stay, so as an investor, you should figure out how to best profit from this situation.
Marin, let's look at all of the sectors in the natural resource universe, for lack of better terms. You know, you got precious metals, you got on and on and on and on, base metals, etc. I would have to say that if it doesn't happen this year, it's going to happen very, very, sooner rather than later. I think in the energy sector, I don't see a really viable alternative to atomic energy. And as the world grows, I mean, you brought out the point about China. I mean, you got the fastest growing economy, major economy in the world, and they're basically going head over heels over uranium, over atomic energy.
And the key is a secure supply of the uranium feed. For example, the price of uranium makes less than 3 to 4% of the actual cost of the electricity generation for a nuclear feed, whereas coal and natural gas make up over 50% of the cost of generation. The whole point, when a country like China or America or Saudi Arabia and Russia, they invest in these massive infrastructure projects to build this nuclear energy, all they care about is getting the uranium feed. So whether uranium is $50 or $250 or $500 a pound, it actually makes no difference to the nuclear facility. What they can't have is a shutdown. That's the most important aspect. So nuclear energy is a great, if Warren Buffett was a resource investor, he would be investing in the nuclear sector right now. That's how cheap it is.
I would have to agree 100%. Now, I remember reporting on uranium just a few short years ago when it was trading around 130 bucks, 140 bucks or thereabouts. Now we're down around 50, if I'm not mistaken, and change. You see it going back this year?
Not in the first half. You see, because ConverDyn is shut down, there's actually a little bit of a glut of U3O8 right now. ConverDyn is going to be shut down, so UF6 is actually increasing in price at a much greater rate than U3O8. That said, the spot price of uranium is in the low 40s. The long-term price is, around the 60 price range, 56 and change today. And the reality, Al, when you look at it, America imports about 95% of the uranium it consumes. Today, a new mine in America needs about $60 per pound to produce uranium. That doesn't work today. But when these nuclear facilities, all they care about is a steady, secure supply of this feed. So towards summertime to the end of this year, you're going to see literally just a gap up in UF6 and U3O8.
Marin, you mentioned that roughly 20% of households right now in the United States get their energy via, the nuclear sector. Do you see that percentage growing over the next few years?
No, because of the big advantage of, let's say the coal sector and natural gas is it's a much smaller capex, and these are existing projects that have been built to replace the existing nuclear facilities in the U.S. There's over 100 power plants in the U.S. You're looking at $2 to $3 billion per plant. That's a $200 to $400 billion, capital program. So they're not going to add on to that because of the permitting delays and all that. Maybe 2 or 3 in the next 10 years will be built. But the real movement is Saudi Arabia, China, Japan. Even after Fukushima, after the election, they're bringing back nuclear energy. So the growth isn't going to necessarily be in America. The growth is elsewhere. But remember, it's about what are the Russians going to do. 20 years ago, when they signed the HEU agreement, Russia was on its knees. Today, it's going to sign a deal with the Chinese. What about the Indians? India is active in this. Saudi Arabia. There's so many more players. And America has benefiting from cheap uranium for the last 20 years. Its time has come.
In spite of the fact that what you're basically saying that the lack of growth in the United States is going to be more than overshadowed by tremendous growth in the other companies you mentioned.
Without a doubt. And the most important thing is America used to be a major producer of uranium globally. And because it got cheaper sources from the Russians, they didn't develop their infrastructure, their mining capacity. That you're going to see in 10 years, and you'll hear it here on your show first, just like oil is traded, the Brent, and then you got your WTI, you're going to see a similar thing happen in the uranium market, where you're going to have a North American uranium price versus a Russian quoted price, and you're going to have a similar dynamics.
Fascinating situation. I mean, it seems to me like there's some real opportunity for investors in this particular sector. Been chatting with Marin Katusa. Marin's going to be on the show a little more often. He's going to be our go-to, he's agreed to be our go-to energy guy, among other things. Marin, thanks so much.